So moving forward, what we've done some research around what is available options and benefits offered by the banks and also in the property industry. I will not talk about Nedbank, but what I'll do is I will hand over to Mervyn Pillay, who's representing Nedbank. He's also going to do a slide share. So Gary, just after my presentation, would you hand over control to Mervyn? So when we looked at all the options that were provided in terms of relief by the banks, all of them, there was a consistent message, especially for the more longer term loans and extended deferments. The bank wants to know your compliance status, not only for your company, but also at the personal level. And they also want to have an updated view of your financial standing. So whilst we are going to look at all the options, make sure you have all those ducks in a row. So when you do apply for these benefits, that you're able to supply them without any problems. Okay, Mervyn's going to talk on Nedbank. So in FNB, okay, they've given relief for that period from 1 April to 30th of June. And I think FNB, I'm an FNB client as well, and also a private wealth client. They've been calling me. So if you haven't had a call from them, I would suggest that you contact your business banker or your private wealth manager and get in touch with them, and they will support you. But this is the kind of relief that FNB are offering, no installments or repayments for a particular period, in this case 3 months. They're going to offer you preferential interest rate. In other words, with our interest rate being so low, you're going to get, if you got a high credit score like Savarian spoke about, you're going to get the better interest cover. And interest on existing loans will remain as is. And that's what I've noticed is they want to keep your current interest rates on your home loans and other loans and overdrafts as is, but they will give you a bridging finance with beneficial interest rates and payment options. So be on the lookout for that. They will not charge you any administration fees, all right? And there will be no admin fees on new loans. And then FNB wants you to, like all other bank, they want you to keep your insurance coverage for your life and your short-term insurance in place and your other insurance protection in terms of liabilities you have with them. But they will give you some benefits, so you need to engage with them. Again, they will look at you on a case-by-case basis. For those that are using SpeedPoint, they have reduced the fees. And also the ATM switching fees, there are no additional ATM charges. So you'll be charged your normal banking ATM fees. And FNB are offering 1 gig of data every month over this period as well. There's the contact details. Most of the FNB information, and it's updated regularly, it's on your FNB mobile app. So take some time when you're relaxing, open up your app and see what FNB are offering you for all the FNB clients. And then there's the website as well. These slides will share with you. A lot of our people, what to find out is when you're looking for help, it's not easily and readily available. So there's the specific FNB URL that you need to look forward and click on. And according to our latest information, this is still active. It will probably end at the end of June. So that's FNB. Gary, this thing is not moving. Gary, are you able to move it for me? Okay, let's look at Standard Bank. Also, once again, I'm also a Standard Bank business client and also a private banking client. And they have been very proactive for their communications to us. In fact, they have gone ahead and done, without us requesting, they have given us some relief options and automatically. So if you're an SME, you can have a payment holiday for this 90-day COVID period, and they will defer the payments. Certain products will be at preferential interest rates. Certain fees will be accrued over this period. Some of them will be capitalized on your principal debt. And they will also engage you on changing the terms and conditions of your loans. What is the eligibility criteria for Standard Bank? You have to be a South African-based company, less than 20 million per annum in turnover. You need to have a business current account, a business launch account, or a business lending account that is up to date and in good standing. And there are much more benefits that Standard Bank are offering. You can email them directly at businessassist@standardbank.co.za and debt care center at standardbank.co.za, and they'll respond to you. Alternatively, call your business banker, and there's a central line for that, and they will be able to assist you. There are also other benefits on your credit cards, your Visa and your MasterCard, which they will offer you. And there's a specific landing page for their relief packages, and it's currently active. Thank you, Gary. On ABSA, we had a look at ABSA. Now, ABSA didn't post much information on their website. What they're doing, they are contacting their clients directly, and they're offering their relief packages on a case-by-case basis. And like all the other bankers and all the packages, they want you to be in good standing, up to date with your payments on your debt. They will review all existing arrangements and then draft an appropriate package for you. And they haven't provided any number, and they said they will call you. So in the event they haven't called you, I would suggest that you call your bank manager at ABSA. And there's a specific media release on the ABSA benefits, and it's still active. It's going to end at the end of June. Right, we also noticed in our research that a lot of retailers have come together. There are 3 organizations that have come together. It's called the Property Industry Group. The agency that sells properties, so POA, that's all the industrial guys, and all the SASDC, that's all the consumer. Those 3 organizations have come together and formulated a coherent relief package for you. And it starts for April and May, and it will have full and partially interest-free rental deferments. And one of the criteria is that you should not retrench your employees during this period, and that you're in good standing with your payments in terms of your rent. They are still researching how they can support those that are renting offices and industrial and hospitality premises from them. I haven't read anything further, but if we have an update, we'll do it at the next webinar. Next, Gary. All right, we also picked up in our research that Ubank has launched a new program, based on a call that the president made early on in the lockdown period. And the initiative is called the Township Rural Entrepreneurship Program, TRIP, and it's in partnership with the Black Business Council. And it's for about transformation. So they're using this period in terms of their packages. There's quite a bit of money that's been set aside, 1 billion, and 250 million is available for the next 5 years to lend to mainly Black-owned companies in township and rural areas, but also to white-owned companies who are assisting with providing support to Black-owned companies. And the specific segments involved, it's IT, the manufacturing, agri-processing, in retail, tourism, and infrastructure build program. And they gave various loan sizes from 50,000 to 1.5 million. We have not read anything further on this particular initiative. As soon as we have an update, we will then post it on the next webinar. Thank you, Gary. Next. So this is I spoke to you earlier on about the property industry group. There are 3 levels of support that's been provided, and they vary for the different months. So you could get a discount on rental of up to 35%. And for May, the maximum of 50%, and there's a deferment period of 6 to 9 months. But these are all for high impacted retailers that are operating in the malls that have been severely impacted by the COVID-19 pandemic. Then level 2 is the medium-sized impacted retailers that have limited product life shelf. Again, they've given a reduction up to maximum of 50% and 25% for April and May respectively, and also a deferment period. And then non-essential services, there are also discounts on rental and also deferment period. Next.
Okay, Kris, the next, can we hand over to Mervyn next?
Yeah, Mervyn, in the meantime, while you ready yourself, I just want to close on this property industry group. What these landlords are doing, they will look at each tenant on a case-by-case basis. They will look at your financials. They will look at your rent to sales ratio, your balance sheet, your stock availability. So there's a lot of financial parameters they're going to look at it. And later, maybe in the next 2 or 3 weeks, once we pass with the UIF test, we're going to see how we can support some of our beneficiary base with this particular initiative. Mervyn, if you're ready, indicate. Can you unmute yourself, please, Mervyn? Okay, Mervyn is unmuted, and then Gary's going to hand over control to you. Mervyn, thanks a lot to you and Linda for coming at the 11th hour in. We really appreciate it. And we look forward to a wonderful presentation. Over to you, Mervyn.
Okay, great. Can you all hear me?
Yeah, so you're nice and clear.
I'm just waiting for control, and then I'll present my screen. But it's a pleasure to present to you guys, and I'm hoping this information that I share with you will be helpful and help you through this difficult time. I'm just remember an African story that goes something like this. It says every morning, under the African sun, a lion gets up thinking, I've got to be able to outrun the slowest gazelle. If not, I might go hungry today. And under the same African sun, a gazelle gets up thinking, I must be able to outrun the fastest lion. If not, I might be his lunch or dinner. So moral of the story, whether you consider yourself a lion or you consider yourself a gazelle, when you get up in the morning, you've got to hit the ground running. And, I'm sure this unprecedented time of COVID has taught us that we've got to be agile. Okay, guys, so we were requested this morning just to cover a few aspects around the cash flow. So, when we looked at it from a cash flow point of view that impacts a business, there's 7 drivers of the cash flow. So I'm just going to run you through the 7 drivers of the cash flow. I think it'll make much more sense to you when you do see the presentation. And then I will cover the aspects from a Nedbank perspective, what we're doing to assist businesses during this time. So one of the major drivers of your cash flow is your accounts receivable or your debtors. So this is basically all the monies that are outstanding from to your business for work that you've done. And your debtors can make or break your business. So I think, just from what you need to ensure is that your order is only fulfilled once you receive your payment from your debtors. You could have delivered the goods, but if you give your debtors terms, you're still waiting for your money. And your cash flow is your lifeblood of your business. So what you need to ensure is that you have fixed terms with your debtors, so they know at this time they've got to pay. And remember that the shorter your debtors terms, the better it is for you. Because once you deliver your goods, you get the monies quicker into your business, and you can turn that money around by buying more stock and selling more. So that helps improve your cash flow. So the shorter the term you can give your debtors, the better it is. So the fine line that you need to walk here is that you need to consider how much time do you need to give your debtors in order to get their business. but you must give them as least time as possible, because the quicker that you get your money, the better it is for your cash flow. The second point is your accounts payable. So this is on the other side of the fence now. Here, this is the time that you can take to pay your creditors. So as opposed to debtors, you're trying to get the money in quicker. The opposite is true for creditors. You must try, these are your suppliers, so you must try and get the longest term possible. So the ideal would be if you can get stock from your suppliers, sell it to your debtors, collect the money from your debtors, pay your suppliers. But obviously, your supplier is running a business as well, so he's going to try and give you the least amount of time possible. So the way you actually operate your business, the more time you can get from your creditors to pay them, the better it is for you. And the less time that you can give your debtors, the better it is for your cash flow. So managing these two becomes critical. So try as much as possible to negotiate the longest time you can get with your creditors. The next important thing is from a cash flow point of view, is your revenue growth and acquiring new customers. So it's important that you understand who are good. I'm saying this in inverted commas. Who are good and your bad customers. Remember, not all customers bring the same profits to you. So you've got to understand the volumes your customers are doing with you and the levels of profitability. For example, if you're dealing with a corporate that might be buying large volumes, you can rest assured they will demand they will give you the smallest margin. So you will earn less from them. But if you look at it holistically, because of the volumes, it makes sense. So it's important from a revenue growth perspective, understand each of your customers and what growth they bring to your business. So don't only chase volumes, but look at your margins as well. Which brings us to the next point, is around our gross margin. So understand what gross margin you're making on each of your customers and the business overall. So your gross margin, generally defined, is your revenue that you're generating less the cost of goods sold. So if you look at your gross margin, your objective is to increase the gross margin. The more margin you can make, the better it is. There are times you might want to sacrifice a bit of your margins to get greater volumes. So that will bring more revenue into your business as well. So if you look at your gross margin, the tips that you can look at: reduce your overall supply chain and your manufacturing lead times. So try and get your manufacturing times as low as possible. Reduce your work in process and your raw materials. So if you're manufacturing, what impacts your gross margin is the amount of stock that you're carrying, raw materials that you're carrying. So try and reduce that by, for example, getting your raw materials in just in time to manufacture. Okay, then going on to from your gross margin, the next important aspect that impacts your cash flow is basically your selling, your general, and your administrative expenses. So in times like these, it's important to reduce your expenses and have less expenses as possible. Because remember, your general expenses, your fixed costs, you will most of the times need to pay it whether you're selling any goods or not. So these become your fixed costs. So just the lower you can make your fixed costs, the better it is from a cash flow point of view. Then there's capital expenditure. So businesses need capital equipment, vehicles to operate. So just what you need to look at, reducing the reliance on your fixed assets will allow your cash to be used in revenue generating activities. So remember, if you buy an asset, you've got to pay for it. So the important thing is that if you're considering, whether to buy an asset or not, consider the use of this asset. If that asset's going to generate you income, it's worth your while investing in that asset. But if it's an asset that's just going to be standing in your premises, not generating income, really consider whether you need that asset. try and avoid buying that asset. So you, in all the assets that you buy, consider, is this going to help me generate revenue? And invest in those assets that generate revenue. Then just from an inventory point of view, your stock levels should be as low as possible. Because remember, any value or any amount of money that's taken up by a stock is eating up your cash flow. So the longer you keep your stock, it's actually costing you money. It's money that you don't really see, but it's costing you money, because that money that is invested in your stock can be turned around by buying more stock, selling, and generating revenue for you. So the important thing when you're considering your stock is look at your stock, look at your slow-moving stock. It might be worth your while to reduce your margin on your slow-moving stock and get it through your system so that you can generate profits. So basically, in a nutshell, those are the drivers of your cash flow. There's greater details when the slides do come through how you can actually impact that. So firstly, your debtors, secondly, your creditors, third, your revenue growth, your gross margin, 5 is your selling, general, and administrative expenses, 6 is your capital expenses, and 7, finally, your inventory. If you look at how you manage this, this will help improve your cash flow. So make sure you have efficiency on all these aspects in order to have a good cash flow. Then just from if I can move on to just what we're doing from a Nedbank perspective to assist our clients. And I want to chat through the COVID-19 SME loan scheme. And this scheme was announced by the President on the 21st of April. And it's a government initiative in partnership with the banks, basically offering a 5-year term loan to businesses. And the rate for this loan has been set by the South African Reserve Bank, and it's at prime. And the specific purpose of this loan is to assist businesses to cover their operating expenses between May, June, July. So that's basically the lockdown period that we've had to assist businesses to cover their operating expenses. During this period, these loans are made available via your banks. So as I said, all the major banks are working with the South African Reserve Bank, where a guarantee has been placed by the Reserve Bank to secure the lending. So you'll find the criteria for these lendings are much more lenient than the general banking criteria that we're using. Just in terms of the loan, this is a 5-year loan that only becomes repayable 6 months after the loan is disbursed. So 6 months after the loan is disbursed is when your first installment will be due. And the loan is repaid, as I said, over 5 years. So if you just have to look at it in the nutshell, this loan is a loan for 5.5 years. The first repayment is due 6 months after taking out the loan, and it is to cover your operating expenses of the business during the lockdown period. Basically, as I said, it's a term loan, a 66-month term loan. The rate is fixed at prime. There's no repayments due for the first 6 months, but interest does accrue. After 6 months, the loan is repaid over equal installments over 5 years. And if you have the ability to repay the loans earlier, you can repay it without any penalties. And currently, what the agreement that the banks have with the South African Reserve Bank is that this offer is only limited until the end of July. So you have up to the end of July to apply for these loans. Whether or not there will be an extension, we don't know at this stage. But at this stage, the deadline is the 31st of July. The loan amount, as I said, covers your full operating expenses. There's no upper limit to it. But the amount is driven by the business needs and affordability. So when assessing these loans, one of the things we will call for is your annual statements. We will look at the operating expenses on your annual statements, and also your projection when you expect to get back into business, the cash flow projection, and that you can afford to repay the loan. So if you're looking at your operating expenses, what your operating expenses include: your salary, wages, your rental, lease costs, your utilities like water, electricity, your supply chain, the suppliers, and other operating expenses like your security and so on. Okay, so just to look at the qualifying criteria for the loan, applicants can apply with their primary bank. So you have to be primary banked with one of the big 4 banks to access these funds. Your entity must be operating. So it's all business types. So it includes sole proprietors, but it excludes state-owned entities, listed companies, and companies with funders and capital market instruments. Your turnover of your business has to be less than 300 million. You have to be registered with SARS, and you have to be at good standing on the 29th of Feb 2020. So that is the date when all your credit agreements, your credit history must be of good standing. Okay, and then you must have the ability to explain how COVID-19 has impacted your business. Okay, so that's basically the criteria. Then just, I think some of the other assistance that, we've been offering businesses is that we've been offering the payment of staff salaries via the South African Future Trust. We've dispersed over 260 million to help businesses repay or pay their staff salaries during this lockdown period. Another aspect that we've been utilizing to assist businesses has been the holiday payment. So we've offered clients a 3-month holiday period payment on their contractual debt. So it could be your asset finance as well as your home loans with Nedbank. So you needed to apply for it via your branch or your banker. And we've afforded clients either a full payment holiday on the installments or partial payment holiday. Could just be the interest portion or whatever portion that the client requested. We in a period now where we're considering a further extension to the payment holidays. So, if you found that you have been afforded a payment holiday for 3 months, it's becoming due now, and you need a further one, you can approach us as Nedbank, and we can extend that payment holiday for a further 3 months based on your circumstances. The other aspects we have looked at for businesses, we've given them a payment holiday on the card acquiring merchant devices that they do have in their premises, and based on the loan facilities that they have with card devices, we've also given payment holidays on that. So that's basically in a nutshell, what we're doing from a business perspective to help small business. For those that are looking for, assistance in terms of advice, I'd like to direct you to our website, which is called simplybiz.co.za, or our Nedbank site, where it has all the assistant packages that we have available. SimplyBiz gives you a lot of advice on how to navigate during this period, and also how to effectively run your business. I think I'm going to stop there. I hope this was an insightful session. Hopefully the technology we can sort out the next time, so that you can follow through on the presentation in future. Thank you.
Thank you very much, Mervyn. That was extremely helpful and very practical. As I've mentioned on the group chat, Our apologies for the technical challenge when it came to sharing Mervyn's slides, but we will definitely be circulating those slides as part of the overall slide pack after the session, probably later today or during the course of tomorrow. I think some important points that has been raised by Mervyn for us to consider as business owners is the issue of compliance is something that we cannot escape. Whether you are applying for government funding through any of the special schemes or from the banks themselves, compliance is a key component associated with that. But also the ability for you to forecast and have the assumptions backed up by the necessary supporting documentation on how your business has been impacted, but also how your business will be recovering should you access any of the financial support programs that are available through the private sector. So thank you very much there, Mervyn. We appreciate the time that you've taken and the fact that a key component of what you've covered is what is available through the 4 major banks and not just from Nedbank. We also appreciate your insights around what Nedbank is currently offering. If you will still be on the line, so we will have a Q&A session after the next presentation.